Hello, property nomads. Hope you're well. Delighted to be joined by Marc Champ of Wharf Financial. A couple of things to go through today, so it should be quite a good episode packed with loads of content as per usual. Marc, welcome back to the show.
Thank you very much. Thanks for having me again.
We were just speaking off air briefly, and at the time of recording this on the back of recent episodes that uh, have been on the podcast, things started to slow down slightly in the market in general. Bank of England held rates, I believe, last time, although that might change in October. I don't know at the time of recording. But I'm noticing things are starting to slow down very, very slowly. What are you experiencing your end?
So yeah, like you said, rates got held at the last MPC meeting, and I think there's a general thought amongst people who I speak to on the street, at the networking meetings and things like that, that the rates maybe they've peaked and they'll be coming down. However, there's been bond sales recently, a lot of bond sales. I don't know if you've seen that, and that has potentially it will lead to a rise in inflation again, which could mean a rise in interest rates. So maybe we will see a little jump up again. Maybe not. It's a bit of a strange time. It always seems to be a strange time, but I suppose that's the economy. It goes up and down, and if you can predict it, you'll be a millionaire. But the what we're seeing is, I think people are thinking rates are going to go down, but I think they may just go up one more notch and then stabilize and come back down. And with the issues over in Israel, it's again caused a bit of instability, and that is never good for the economy. So let's see what happens there. But you were talking about a slowdown. This week we've actually seen a lot of inquiries coming in, and I think that's because there's a general perception that rates are, at the top or almost at the top of where they're going to get to. So I was talking to an agent yesterday, an estate agent, and they said this is the worst they've seen it since 2008. So there is definitely a slowdown. But as I've always said, when there's a slowdown, there's opportunities for people. And we're talking to lots of people about, well, what can we do here? What can we do there? We've got this below market value, which usually is a load of, I don't know if we're allowed to swear on this podcast,
Knock
but
yourself out.
a load of rubbish, we'll say. When you get a below market value deal off Facebook, and it's basically just overpriced, and yeah, anyway, it is what it is. But we are seeing opportunities, and some of the bigger players being able to buy things, and with the rates slightly down, we're able to make them work and getting the money out a bit easier out of the deal. So yeah, there is a slowdown, but I think there's definitely opportunities for experienced and punchy investors.
Yeah, that's the caveat we always give doing these episodes and in other episodes on Property Nomads as well. Even on the YouTube channel, we're always saying that although what we're saying is might come across as being doom gloom, etc., we do always have to look at that positivity and say there's always opportunity. Just quickly going back on interest rates and inflation in general, and from what I've studied from past economic events over the years, going back all the way to Roman Empire, it says normally inflation comes in two or three waves. So to me, we've had the first wave of inflation, it's sort of dying down a little bit, and then I find it quite interesting. You've mentioned that actually. Hang on a minute, with everything else that's happening, not just Israel and Palestine, Gaza Strip, etc. Also, that gas pipeline being tampered with between Finland and Estonia, I think it was as well. So God only knows what's going on there. That's probably going to lead to, I reckon, another wave of inflation, like you said. And then sometimes, from what I've studied, we might even get a third wave of inflation. So definitely nowhere near being out of the woods as such. And people that I find it funny when I look at mainstream media and they sort of come along with all inflation's over. So, yeah, I'm not too sure about that personally, but I just an antidote to a comment you made.
Yeah, and I think the media are sensationalists. They need to write stories, and they will write stories, and it's either really good or really bad. It's never just mundane. So I think the economy does need a bit of a mundane period, so people can set the stall out and go again. And I think it will help all the way along, because there are people struggling out there, and there's a squeeze on people's finances. But again, as we were saying off there, it's been tampered a little bit with, because the actual debt is a lot more manageable, because lenders have allowed 35 years terms. They're allowing some interest only mortgages, and this has allowed people to manage their finances better. And that's because the banks are more well capitalized, and they are able to support their customers. Back in 2008, where balance sheets didn't look quite so healthy, they couldn't do that. And as soon as there was an issue, there could be a run on the bank, and all the problems happen. We're not there, and I think that's you have to look back at the measures that were put in by the PRA and the FCA and all the different bodies to prevent that happening next time. And do you know what? It has. It's not. We're not in the position where we were in 2008. So. Maybe the system is working better than people would give it credit.
Unless you're potentially Metro Bank,
you say that. I was out with Metro Bank, and they were very much of the opinion there is no crisis. It's again the media hyping it up, and they said, there's different rules for Metro Bank from the rules there are for the other, or the high street banks. So there's a certain amount of capital banks have to hold back for them to be able to lend money out. But Metro have a slightly different rule to the high street banks. And if they were on the rules of the high street banks, then it potentially wouldn't be have the issues of having to raise capital that it would do. So they're not actually too far out of where they're supposed to be. And they've raised funds. It's not been a difficult process, it seems, to raise funds. There was issues, and then on the Sunday they had the funds. It wasn't, a long, drawn-out process. And also the person who I was speaking to was saying that they had only 2 people coming to the bank saying they wanted to withdraw their money from Metro. And those 2 people, one had £5,000 in the bank, so it didn't matter anyway because he was guaranteed the funds. And the other was more than that, but after a conversation, he left it in there and he was comfortable with the position. So it's different to how it was in 2008, and I think the harsher rules on the lenders are there for a reason and are protecting customers at the bank. So, it's not a bad place to be, really.
Two things I would add to that. Number one would be if anyone from Metro wants to appear on the podcast and clarify all of that, that actually would be very useful. I think I certainly know Aaron and I are Metro Bank customers. That's our business banking. So if you know anyone that would want to appear on the show and have a chat about that would be very useful, actually, I think. And the second point I was going to make was that I imagine if there were to be banking runs or whatever moving forward, maybe it won't be the same as it was a few years ago. And what I mean by that is banking apps have developed so much that if I wanted to take, I don't know, £5,000 out of bank A and move it to bank B, you just phone app, done. So that might be interesting. All that being said, Marc, we'll polish off this podcast. Again, you mentioned off air. You mentioned about commercial units and quite high, well, in some cases, quite high drops in values. And this is to do with energy efficiency of commercial buildings, and you said you were chatting with a bank recently. Tell us a little bit more about that and what opportunities might be there for people.
Yeah, so talking to a bank, a European bank, about sustainability in commercial units. We tend to see commercial units owned by more experienced investors who typically are more advanced in years. So those people are a little bit older and probably held properties for a while. And the lack of sustainability or the energy efficiency within the buildings is a problem. And people, purchasers out there who want to buy them, are looking for commercial buildings where they're energy efficient. So those that aren't are having a massive drop in value, and we're seeing up to around 40% drop in commercial values for non-energy efficient properties. So I think there's going to be opportunities there, and I think it comes where the older generation who own the commercial properties are basically just tired of getting these types of buildings up to scratch and up to standard. So if you could get a property below the market value that you potentially perceive it would be, then do the works and get it to where it needs to be. I think there are definitely opportunities to make some good money there. So I think, yeah, commercial improvement or commercial property improvements is something to look at.
Yes, absolutely. And it just goes back to when we talk about there being always being opportunity. There's going to be, again, we said this at the start of the year, we'll say it again when we're recording, certainly in the next couple of years. I think there's going to be so much opportunity on a both smaller scale and a grander scale in the commercial space for a multitude of economic reasons, that some of which we're going to be familiar about, some of which are going to be bubbling so under the surface that they might take a lot of people by surprise. So watch this space, basically. All of that being said, enjoy your holiday in Marrakesh. We'll catch up in probably, I don't even know if people needed or wanted to know that, but people now know that. So enjoy your holiday, enjoy your time away, and yeah, look forward to catching up at some point in the next month.
Excellent. Thanks, Rob.
Cheers, Marc.